Hello again, and thank you for your patience. We are now ready to start this webinar for the London session. But before we do, may I draw your attention to the disclaimer that you can see on your screen? I know you've seen it many times before, but it has to be repeated at the start of every webinar. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Now, as we're a little bit, few minutes late in starting this morning, very quickly, just for the purposes of, I know we've got some new people with us today. We'll be looking at the Forex market using the methodology that David and I have been using and developing for almost 20 years now, which is volume price analysis. And best way to show the methodology is to look at some charts, of which we have live charts, and I've got a couple of things I'd like to show you as well from some price action from yesterday, which has carried on today on the New Zealand yen. But we look at the Forex market not just from a technical analysis perspective, but we also look at the fundamentals, and we also look at what's happening in related markets. And having mentioned the New Zealand yen and the yen pairs, they are the yen as a currency is the perfect example of how movement and sentiment in one market can affect movement and sentiment in the Forex market. But again, all will be explained as we go along. If you haven't come across the methodology before or this approach, there are books on Amazon. This is what we call the Complete Forex Library. It's actually a digital library, but it has all the books which covers the concepts and the approach that I have mentioned. So there's that one. What we've also done is we have created some very specific tools for the Forex market to help us, if you like, pick up this sentiment. The yen reflects risk on, risk off sentiment. So we want to know if the yen is moving, but more importantly, in which pair is it moving and which is the strongest move. And what we'll look at today is lots of other things we're going to look at, but one thing in particular to bear in mind is that when, as we had yesterday and we've had again today, sentiment is very positive in as much that the market is willing to take on more risk. There is a greater appetite for risk in as much that equities are going higher, the indices, the futures market for the S&P, the NASDAQ and the YN, they're all moving higher. As I said, that is reflected in the yen. In which pair, which yen pair will depend sometimes on the session. And what happened yesterday was the yen was being sold, all the yen pairs were moving higher very strongly. But in the morning, it was pretty much a morning for the pound yen. That kind of eased off a bit as we came up towards lunchtime and just before the US session, and then it kind of did rotate into the New Zealand yen, and that's something else to bear in mind with the Forex market. And with these tools that we've developed, you can see that at a glance. You don't have to go and inspect, hundreds of charts basically, because what we've done with the indicators is disassembled the Forex market into the movements and flows into the individual currencies, and then where those flows are strongest and in what pairs. And as I said, and that is really a feature of the Forex market. And as I said, the sessions where you have new traders coming in, and the yen pairs kept moving higher, but the pair that had been the strongest in the morning wasn't the strongest in the afternoon. It was as I said, it was pound yen in the morning, New Zealand yen in the afternoon. Now, the other thing we're going to talk about today which is a topic that we started a couple of weeks ago, which is about reversals. One of the elements of the volume price analysis is the use of candles and candle patterns, and we're just going to start to look at some particular candles and what they tell us whether we are going to see a reversal or not. And in particular today, looking at up thrusts and hammers, because they're the classic reversal, potentially reversal candles. Price action traders sometimes call them pin bars. We call them up thrusts, shooting stars, and hammers. Those of you who are on the program will know the terms that I am referring to, and they always happen. They always occur at if you're going to look at them from the perspective of a reversal candle, they have to come either at the top or a bottom of a move. You do get what looks like an upthrust or a hammer in a trend, but it is not a potentially reverse. It has to come at the top of a move. And of course, we look at the volume associated with that candle. Is that going to validate a potential reversal or not? The other thing is to look at this also in more than one time frame, because candles are formed so if you take a 5-minute chart and a 10-minute chart, and you look at two candles at the top of the top of a trend, if you overlay them on together, sometimes that can form the candle that you are looking for. The best way to describe this is actually looking at the chart. And then the final bit for the potential reversal is, does the candle occur at a critical level on a chart? Is it forming at a significant level? Now, if it does form at a significant level and the candle is then touching that level, the probability that you are going to get a reversal or a pullback or a correction is obviously going to be that much higher. So there's two of the concepts of VPA put together, and which is the candle patterns for reversals together with support and resistance. So before I carry on and look at my charts, I'm just going to go and pass it over to David, and then we'll come back and have a look at the New Zealand yen, which is actually still moving higher.